Thanks, Barry. Thanks, Sydney. Really excited for this. This is actually all new material, Barry. So hopefully this one impresses you too. To be quite frank, when we pitched in London, we didn't have a great enough idea about revenue, and now we have a much better idea. So it should be fun. So Kora. So the name of today's keynote is what transforming the economy, which is pretty dramatic. We deal in markets that have very short attention spans, so we just turned out 2 words. I think it's a lot better than the other title we came up with, which was Unlocking Growth by Linking Decentralized Cooperative Groups with Global Fixed Income Markets. But that's basically what we do, or that's basically the plan now, to unlock growth by linking decentralized co-ops with global fixed income markets. So here's what we mean by that. So we think there's a huge mismatch in the way capital is being allocated. And I don't think this should be a surprise to anyone here. If at least in New York, if you can get like 4 or 5% on a bond these days annually, then that's not bad. It's not that easy to get like yield. At the same time, we're operational in Nigeria, and we are turning over like 100% profit or returns in like 6 months, or like 50% returns in 4 months. So we're talking about the agricultural market here. The agricultural industry is $5 trillion, and a tiny fraction of that is securitized. 94% of that is family owned. 84%, I think 75% of land is smallholder. So, and at the same time, on the other side, if you are running a smallholder farm, it's incredibly hard to get capital. It's almost impossible to get a loan, not to mention trying to do like a DCM offering. You forget about it. It's not even close. And there's a reason for that, which is that a lot of these assets on the other side aren't even close to investment grade. In fact, we might as well talk about that. So there's really high perceived credit risk when you deal with producers. We call them producers: agricultural, manufacturing, artisanal, textiles, ceramics, whatever. There's very high perceived credit risk in these markets because these people might not have bank accounts, they might not have a credit history. Many of our end users don't even have ID. We had to go through a clause in Nigerian law called financially excluded to even get them on to our platform. And that's difficult. If you don't have access to formal financial services, it's hard to become part of the global financial system. The other part is that because of their small scale, they're incredibly vulnerable to shocks, to famine, to drought, to changes in currency, right? Currency conversion rates, and they face incredible inefficiencies because they lack economies of scale. It's high. So it's just a bad environment all around if you are a small scale producer in an emerging market, period. And I think that shouldn't come as a surprise to anyone either. And so really what we're trying to do is we're trying to reduce credit risk on one side by showing that we can create sustainable businesses, high growth businesses in these areas. And so one side is about transparency. So if the investor, right now, like where is the money going? Usually the money goes to someone with a bank account, which is probably a few levels up, and turns into cash and gets filtered down, and you don't even know where the money went at the end of the day, which is not even close to acceptable. So we want to bring investors transparency into how the fund's being used. We want to give investors a say in how funds are being governed. We want to let them say if they don't like the way funds are being dispersed, then they won't be dispersed. And by the way, this is all a live project that we can talk about in a second. So that's one side about credit risk, about transparency. The other side is simple. It's about creating a sustainable business. Ultimately, especially if you do a bond, if you can't pay back that coupon, then there's kind of no point. And so we need to create sustainable businesses. And especially when we deal with smallholder, small-scale producers, a lot of times that's about formal access to financial services. That's about stuff like creating economies of scale. And so we have here a picture of identity and money transfer. And so that's what we do. What Kora does is we build these we call them inclusive financial systems, which are all about creating sustainable growth and are kind of geared to linking investors to these transparent financial ecosystems. And by the way, that's the revenue model is just investment banking for emerging markets. Agriculture is $5 trillion. Most of it's not securitized. If you can take 5%, that's about 25 billion revenue. That's about it. I think everyone here knows how that works. So specifically, Kora Kora provides infrastructure. So we're building our own blockchain, going back to another gentleman about why you need to build your own blockchain. We can talk about why in a second. But we're building our own blockchain to provide financial services. Stuff like identity, stuff like money transfer, obviously stuff that needs to be compliant. And our users can access it without internet. In fact, our pilot in Nigeria, which we have 25,000 users, like 80% don't have IDs, and almost none of them have internet. So those are the kind of environments that we work in anyway. So we go through telecom networks to get them internet access to the blockchain. Specifically about why we had to create our own blockchain to do this, and why we had to go through all that trouble, is because when we started this project a year ago, we looked around and we didn't see a blockchain that met our requirements for financial services. So especially with GDPR going into play, if you don't provide data privacy, forget about right to forget, whatever that means. If you don't provide data privacy, then you might as well not deal with licensed entities in the EU. So basically every public blockchain fails. Or you can be Zcash and Monero and be completely anonymous and have no regular oversight whatsoever, and all those blockchains fail as well. And that's still kind of the state today. There's still really not any blockchains that meet all the criteria. And that's not even talking about scale. And it's not even talking about the fact that our users don't have internet. And so we had to design our own blockchain to create something that meets all these requirements. So we created a financial services specific blockchain. And that's basically how it works. Without going into the details about the architecture, basically each of our mini financial systems, they run their own private consensus rounds. And then you see there the little like clouds. All their data gets kept on their own personal data servers. So everyone keeps their own books and records. Everyone has data privacy. I mean, you and your counterparty know what happened, right? Which makes sense. They're entitled to that data. If you work with a bank, they have a copy. They're entitled to that data. No one else has a copy of that data. If there ever is a dispute, then it becomes a he said, she said kind of situation. So what we would do is for every transaction, we hash that onto the mainnet. So you can take your copy of the transaction and point it to the mainnet and say, this data matches, here's a timestamp, here's your private key, or here's your private signature, so it happened. So all we're doing is we're using the blockchain as we think it should have been used, as basically a trust machine, right? As a triple entry accounting, which by the way gives us incredible scale because we don't actually need to process most of these transactions. And on top is where it comes into play. So blockchains are secured by crypto economic means. Every public blockchain needs to have their own token. Otherwise, there's no incentive to commit blocks. And so we're drawing on a pretty rich history of this algorithm called delegated proof of stake, used by EOS, used by Cosmos, used by BitShares, used by Lisk, Arc, all different flavors. We kind of drew on what has worked in the past and kind of what is coming up with newer variants like EOS. And just made our own version, and that's it. As a Kora network token holder, we are doing an ICO. As a Kora network token holder, you become part of governance of the blockchain. You receive a share of block rewards and transaction fees, and it's the same as BitShares and same as EOS. Just a few more slides. So yeah, we have a lot of betas lined up this year. So we're currently operational in Nigeria with 25,000 users. That's mostly domestic payments, and that's how we realized there was incredible opportunity in securitization. The next really big one is Bangladesh. So we're doing a 30 million equity offering actually in Bangladesh. It's a co-op bank there, and we're selling tokens that are backed by shares in the co-op bank. And then the money goes into the other thing we're doing there is we're rebuilding the back end of the bank. So most of their processes are still manual and still paper-based. We're basically moving them onto a blockchain-based architecture, which also gives all the investors and members in the bank transparency into finances and governance and how the money is being spent. So going back to transparency, about sustainability, about governance, that's what I mean when I say it's all being encapsulated in this Bangladesh project. And honestly, like finding people who want to work with us has been the least of our problems because it's a very attractive proposition. It's, do you want low-cost financial services and do you want a way to access global markets? Although at one point, we aren't actually pitching to pension funds or whatever with Bangladesh. We're actually going to the Bangladeshi diaspora, so a lot in the UK, a lot in the EU, a lot in like the Middle East, which is much much easier market, I think, to solicit equity offerings for. And for them, it's a combo of like investing to help develop their home country, and the fact that of all the opportunities they have to do that, most of them are like, give me money and I'll come back in 2 years and I'll give you some great returns. So being able to say that you know exactly where your money is going, that this is an entity licensed by the government of Bangladesh, it's got 17 years of operations, and it's built on a blockchain. These are all very attractive propositions when we make these pitches. A few more slides. This is our team, pretty diverse. So just a few highlights here. My co-founder Dixon, previously at the UN. This is his third financial inclusion startup. One was previously acquired. My career has mostly been in fintech. Previously, I ran an AI practice for a management consulting firm. We're, I think, one of relatively few ICOs that have a CFO, because at some point we do want to become a licensed entity. So obviously, our books need to be very, very carefully audited and put together. One other guy who's I'm personally a big fan of is Gideon, who's been a great find for us. He spent the last 4 years at a Nigerian NGO called eFinna, focused on financial inclusion, and he's now full-time leading our African operations. And yeah, lots of other great people on our team as well. We have a lot of great partners. So we didn't build all this from scratch. We're using the same framework used by the Central Bank of Cambodia through our partnership with Suramitsu. We are partners with Stellar. We're also partners with Ripple. We use them for liquidity, for cross-border money transfer. Morrison Forrester is our law firm. PwC is our accounting firm. We have some great advisors. One guy I'm going to call out is actually Faisal Khan. So how many here have dealt with cross-border money transfer in a business side? Anyone here? Great. So Faisal, there's not a lot of cross-border money transfer consultants out there. It's kind of a niche industry, and Faisal's one of the most experienced, and we're very lucky to have him as an advisor. And he's been helping us figure out how we're going to actually facilitate these payments, and in obviously a regulated fiat context. And that's it. That's Kora.
Before we take some questions from the audience, I'd just like to, one of the really powerful things I've heard you say when we were doing the interview for ICO Radio was the phrase, talent is evenly distributed, but opportunity is not. And would you talk about that and the core mission behind all this technology, please?
Yeah, so we've been around since April last year. Our mission was and always is to provide equal access to financial services. And we also don't believe that blockchains are post-capitalist. We think they're hyper-capitalist. And so we think that the goal here is really just to make it profitable for people to provide financial services to our end users. And so that's what we're really trying to do here when it comes down to it is let's create a way for everyone to grow together when we do these kind of things. Going back to that phrase, talent is equally distributed. Returns are actually not that unevenly distributed, but capital allocation and access to liquidity is certainly not. It's not even close to equally distributed. And certainly the percentage of wealth that you capture from the value you create is also not even close to equally distributed. And that's what we're really trying to smooth out and make a little bit more equal with Kora.
Yeah, and would you also, again, from one of our previous conversations, I know that this project that you're working on in Nigeria is really important to you, and could you just explain from the ground up, we've gone from the top down, but from the ground up, why that's so important and who it's important to?
Yeah, so let's get back a few slides. So Nigeria, we've been working on that since August last year. My co-founder is Nigerian. He's in Lagos right now. So Brian's Nigerian, Gideon's Nigerian. So there's a lot of personal stake behind it too. And so what we're doing, we work with an aggregator that has 25,000 farmers in their network. Aggregator meaning they grow the produce and then they give the produce to the aggregator to actually sell in the market instead of each person selling on their own. And right now, the way the model works is the aggregator actually finances the farmers. So every 2 weeks, the aggregator is in the city. The farmers have to drive to the city. It takes about 2.5 hours. They get a big bag of cash. They drive back. And it happens every 2 weeks. It's been going on for years. It's obviously not great. And so what we're doing is we're essentially tokenizing the Naira. So we have a licensed partner there called VTN. The aggregator sends a bank transfer to VTN's segregated account. We issue an equal amount of tokens onto our blockchain, and that goes to each farmer's balance. And then the farmer, we're also setting up a series of agents points, which are small businesses that accumulate cash in their operations. In this case, it's mostly gas stations. And so they have an excess of cash, and they have the opposite problem where they have to drive to the city every 2 weeks to deposit their cash. And our farmers are going to the gas stations and giving them their blockchain balance and getting back cash. And then at the end, the gas stations, they send the tokens back to us. We send them a bank transfer from the seg account at VTN, and we kind of close out the loop. And it's a very simple system. It's really just, it's a very simple, small digital currency financial system, if you think about it. But it means that for literally thousands of people, they don't have to drive to the city every 2 weeks and get their money. So they're not at risk of being robbed along the way. And obviously it was an amazing learning experience for us. That was impactful.
So bringing some of the things that we take for granted to people who've never had that before and probably couldn't have that otherwise. So we've got a few more minutes, so we've got time for a question or two from the audience. Gentleman at the back.
So when you talk about governance, how does someone who only owns tokens have... So when you mention governance, how does someone who does not have stock, who does not have equity in a company, how do they influence the decisions as a token holder?
Yeah, let me skip ahead a little bit. Here we go. So to go into the actual consensus algorithm, so running delegate proof of stake, which was first invented to get around the scale issue. And the trick they're using is basically that there's certain consensus algorithms that are Byzantine fault tolerant, but you need to know exactly who the validators are. So in Bitcoin, anyone can be a miner, right, which is great. If you in DPoS systems, that's not true. You need a bounded set of validators, and so that can very easily become a centralized system. So what you do, and this is how BitShares, EOS, all these guys work, you issue tokens. The token holders vote on the block producers based on the amount of tokens they have. So that's the so-called delegated stake. And that's basically it. I mean, obviously there's a bunch of other ways that blocks actually get committed, but basically, yeah, the community surveils and governs the block producers in a decentralized way. The block producers receive block rewards, they receive transaction fees, and that's how the whole ecosystem works. And so I just want to clarify that a token holder does not own any shares in our Bangladesh project. They don't own any shares in Nigeria. They merely own, they play a governance role in our blockchain, and they're rewarded proportionally for that. So it's a little bit bifurcated, the crypto world and the fiat worlds that we're working in.
Gentleman at the back there.
You said that you buy the tokens back in the example with the farmers and the gas stations. There seems to be a degree of centralization there. Who is the you in you buying the tokens back?
So another thing is that we're not buying the Kora network token back. We just made a token called the e-Naira.
Sure.
Call it anything, Naira coin, whatever.
Right.
And I don't think it's like.
When you say you made it, who's backing the e-Naira?
VTN. Well, it's a few things. So the aggregator has the capital. They need to put the capital into a segregated account at our licensed partner. All the transactions are done by our licensed partner on behalf, essentially, of our aggregator partner. So when we say we, I mean, they're all on our blockchain in that sense, but we're not licensed to do agency banking in Nigeria. We're not licensed to hold custody of customer funds, and we don't run a farming business in Nigeria. So we don't have much impact on the system one way or another besides just providing the technology.
Okay, thank you.
Sorry,
Stephen.
Follow-up question. I'm thinking about Nigeria. Couldn't it just have been, why do you need the token? Couldn't it just be done with electronic funds? Couldn't it just have been done with electronic funds transfer? Perhaps on a mobile or something? Or other forms of existing digital money transmission? Why do you need to introduce the token to do what you're ultimately achieving, to save people having to go to get buckets of cash? They don't need to do that already. They can get it down on their mobile already with other forms of electronic money.
So Nigeria is an interesting market. So one of the reasons why mobile money hasn't taken off in Nigeria, because that's basically what you're referring to, is the cost of providing infrastructure. So Nigeria has a very fragmented market. It's really not terribly easy to start a mobile money business there. And really, the main proposition from us to VTN, which is our licensed banking partner, was you get a mobile money business for free. Because with the blockchain, we are decentralizing the cost of running compute, like IT compute, to all our block producers. And we are, in theory at least, we're creating an efficient market around the cost of producing blocks, which is basically running the entire system. And I mean, because the alternative would have been for us to basically run a centralized system and for us to keep track of where all the tokens are, which puts us tremendous liability for a start at cost, and is really not something we wanted to take part of.
Okay, we've got time for one more question over here.
Hi. I've often thought that people who are in those circumstances that are in the third world, who need to get financing, generally have no identity themselves in terms of the types of things that I might have in the first world. I have my driver's license, I have my bank accounts, I have all of the things that would get me credit and get me identity, whereas a potential borrower in your world who didn't pay his debt might say, well, that wasn't me, that wasn't my debt, that was someone else's debt, I need to borrow again. I was thinking that my invention would help the people in the third world more than anybody else, because they would have an absolute identity that was absolutely them, that as a borrower they could identify, this is me forever, and all my debts are identified with me. And
Yeah.
the question is, do you agree that there's a benefit even for the borrower to have that, and that perhaps it's a good idea for the lender to lend the cost of the device for them to, if they don't have it, for them to have it and put their fingerprints in it, and be able therefore to guarantee that they are going to pay the debt back?
Thank you.
So I don't know your invention.
Pardon?
But I don't know what your invention is, but we actually don't link the debt back to the individual. We link it to the co-op. I also can't read that from here. But so basically the actual debt is held by the co-op. And so these are usually fairly large businesses. In Bangladesh, they have 35,000 people. And so yeah, identity is not a huge issue. There's a board of directors, there's a registered license, they have corporate bylaws, all that great stuff.
Maomao, thank you, and all the best.
Thank you.
Kora Networks, ladies and gentlemen.